welcome. It's been a long time. My name is Jason Kwong. I'm actually from Ace. I look over the insurance team. First and foremost, I want to say welcome because it's actually very amazing to be here live in person, not in the metaverse, not online. We have some people online, but it's I'm very glad just to be here in person because this is actually our first live event in 3 years or so. So that's why, yes, thank you. Yes, here live drinking. There's no, I'm not looking to a camera. So that's why I'm actually very happy to have this event. So, first and foremost, I want to thank our partners for today's event, the FinTech Association of Hong Kong. So I just want to thank Justin and also Jason for all their work. Of course, I also want to thank the Hayes marketing team as well, Jonathan and also Hazel, and of course, there are administration team. And of course, we have a lot of Hayes tech people here today. Hello, yay! So please say hi to them. So Hayes technology story is actually 3 years long. Pre-COVID, I think we're a team around maybe 5 to 7 or so, and just because we saw this change within the recruitment market, everything's gone digital, everything's gone to technology. We pretty much 5 to 6x our team. We have probably close to 30 consultants now recruiting across cybersecurity, infrastructure, data, UI, UX, projects and change. Am I leaving anything out? Oh, software development. Everything within technology we do cover now across every sector, financial, non-financial, permanent, and also flexible contracting. So first and foremost, I want to thank each and every one of you for being a business partner, or at the same time, a future business partner as well. So please, enjoy yourself tonight. There's drinks, there's food, and again, this is our first event in a long time, so I look very, very much forward to meeting all of you. So let's kick things off. Today we'll start off with the panel discussion, the future of Hong Kong and Greater Bay as a digital financial hub. Followed by that, it'll be the meet and greet section where we can finish off those drinks, and please do help us finish off those drinks because I don't want to carry it back to the office. So let me introduce our panel speakers. Thank you. All right. So first and foremost, I want to introduce the CEO of Neptune Digital and the chairman of the FinTech Association of Hong Kong, Neil Tan. I want to introduce the Chief Legal Officer of Prudential Hong Kong Limited, Howard Kwong. And the Chief Strategy Officer of WeLab Bank, Jessica Lam. And of course, musical chairs. We use that a lot in the recruitment industry. Okay, so last but not least, our moderator for today, my pal, Jasper Leung.
Hey, thank you everyone for coming. Taking your time. I know it's a rainy day outside, but thank you for making to the event. And of course, thank you for the panelists for joining our discussion. Before we actually started, why don't you guys actually introduce yourself to the guests about your background?
Okay, we should start from left to right.
Okay, I got it. It's pretty technical with this game, but yeah, my name is Neil Tan. I'm the CEO for Neptune Digital. It's a blockchain company. We have 2 chains. One is inside of China, the other one is outside of China. Our overarching mission is to make Web3 available to everyone, accessible to everyone. How do we do that? It's a fiat-based crypto-free chain. Essentially, if you really think about it, people that participate in Web3 today are only people that have crypto, right? So what we're doing is going the other way and making it accessible that way. Secondarily, as far as my other role, my other job is as the chairman for the FinTech Association. So fantastic organization. We've got 8 different committees. Sorry to plug away here. But yeah, so everything from GPTs, big data, blockchain. We've also got wealth tech, insurtech, reg tech, and also ESG and green tech. So welcome everybody to join. So I'll pass it over to Jessica.
Thank you. And the most important committee for us to talk about there is Digital Banking and Payments Committee, which I am a board sponsor for. So I just wanted to make sure everyone knew about that. Yeah, absolutely. So guys, hi, I'm Jessica Lamb. So two identities here. One is I am a board member of the FinTech Association, following on from Neil's plug. I've been a board member for about 4 years now. And WeLab, which is the organization I represent, has been one of the founding members for the better part of, I think, 8 years now. So for my day job, I'm the Chief Strategy Officer of WeLab. We are a Pan-Asian FinTech company headquartered in Hong Kong, founded in Hong Kong in 2013, so coming up to 10 years now. Probably one of the first FinTech companies in Hong Kong, and we survived throughout the period and thrived from there. For us, you know, we really had a vision back then and felt that we could do something different in the world of digital, in financial services, everything online, everything digital. Since then, we are a Pan-Asian, Hong Kong, mainland China, and Indonesia in terms of presence. We serve over 55 million users, as well as 700 sort of corporate B2B customers. And so when you think about a GBA presence, we were there since 2014. So we've been there for that part of 8 years. Our China headquarters is in Shenzhen. Of our customers, about 10 to 15 million of them are actually within the GBA. We have staff. We have a large team in the whole GBA area, you know, service our clients that way as well. And so for us, you know, that has very much been part of our modus operandi, even before the whole concept of the GBA was in fashion. But at the end of the day, we also run 2 digital banks, one in Hong Kong, which is WeLab Bank. And for those of you curious about it, just go onto the App Store, go onto, you know, Play Store or whatever. Fantastic app. Any questions? Actually, our group head of product is here, so you can talk to them as well. I might not be able to deal with some of these technical issues. But then we also own and operate a digital bank in Indonesia as well. So for us, it's very much financial services, doing it digitally, but bringing on a new mindset. So that's a little bit about me.
You should say something about what you said.
You want to do the plug for me?
No, it's okay.
How many of you know who Ethan Chan is?
I didn't get a ticket.
That's it? Adeson. How many people who know Ethan Chan is? Okay.
These people, I know you do.
Okay.
And you get a ticket, and you get a
So
ticket.
Howard wants a ticket. So if Howard wants a ticket, you know, there's actually very easy ways to do so. Find me later. I'll teach you guys how. Via WeLab Bank. Plenty of ways to get a ticket. No lucky draw. Very, very simple criteria. But over to Howard. Yeah, I'll pay you later.
Thanks, Jessica. So my name is Howard Paul. I am from Prudential. Anyone here who have never heard of Prudential before? Excuse me? Oh, lovely. I appreciate that. So anyone here who does not have a Prudential policy? Everyone? You might find yourself sitting next to a mysteriously looking agent. So don't hesitate. Just say yes. It's okay. We don't bite. So yes, we are a life and general insurance company, and we have offices. We have coverage in Asia, over 12 countries. And for me, as the chief digital officer there for the Hong Kong local business units, we do anything related to digital, but largely digital transformation for both internal staff, agents, as well as external, our customers. Yeah. So COVID has changed a lot of things, and then we see the demand for insurance has really skyrocketed, although some business has been impacted. But nonetheless, that's really my cue. There's a whole lot of stock for Prudential. We don't have Eastern ticket. We probably will sponsor some concerts down the road. So stay in touch, and now that you
Can swap.
what's that?
Can swap tickets.
Why not? Sure, absolutely. That's a great idea.
Yeah, so, well, thank you very much for your introduction and being panelists for our first event in 3 years, actually. Actually, a little sentimental story. So 3-4 years ago, my first event with Hayes actually started here. Helena would know because I first met her here. So, thank you. Yeah. So yeah, so coming back into this space and being able to see everyone together in one space, talking about a very interesting topic has been really an honor to me, and to be alongside with these guys, it's truly been an honor. So I'm not going to waste any more time. Let's just dive right into it. So today, as you know, we're going to be discussing the future of Hong Kong and GBA as a digital financial hub in Asia. Hong Kong is actually one of the most thriving economies and is a hub of international trade and has been known for a financial hub of Asia for decades. So now that we're moving on to a new era of digitization, I'm sure there are a few points that we would want to know what's going to happen to Hong Kong in the future, right? So first of all, competitive advantage. So I wanted to start this, question with Neil first, actually, coming from a traditional banking background with Deutsche Bank, Boston Consulting Group, and HSBC, to now becoming the chairman of FinTech Association of Hong Kong. What do you think is Hong Kong's competitive advantage over the rest of Asia in terms of digital technology?
Yeah, I mean, if you're paying attention to the news probably a couple of weeks back, I mean, we were basically on our backs, right? A lot of negative news inside of the marketplace, inside of the media, cancellations of the sevens, of FinTech Week, and so on and so forth. But ultimately, we turned it around, right? I think that was a huge win for us. If I were to put my FinTech Association hat on, the way that we work is as a super connector inside of the FinTech ecosystem. And generally speaking, it's in 4 different areas. So incumbents like banks, insurers, finance. Secondarily is the fintechs themselves. Third is within accelerators and incubators. And fourth is inside of the different universities. So if we look at Hong Kong's competitive advantage on those 4 sort of directions, incumbents, Hong Kong is the #1 market for 10 years in the capital markets from IPO perspective from 2021. It is also a $35 trillion wealth hub, right? So incumbent banks, they've done well, even though they're a little bit slow. I come from HSBC, but fintechs, we've gone from 1,000 to roughly about 4,000 startups overall in the space of around 6 to 7 years, right? So, and then we look at sort of the universities. What is it? PolyU was just recently named #1 in blockchain globally, and all the Hong Kong universities were on that list as well, right? So, I mean, start thinking about it. I forgot the 4th one, but anyhow. The point being is that ultimately these are all of these critical advantages that Hong Kong has to bring to bear in terms of this market. It's ours to play and ours to win side of the space. So I'm very, very confident about our capability set and also driving against that roadmap that the government has laid out, especially with all the different types of incentive programs that are inside of it. So, yeah, thank you.
Thank you, Neil. Jessica, what about you? Being one of the first 8 licensed virtual bank in Hong Kong, and I know you came from Goldman Sachs. How has the Hong Kong banking industry changed in recent years?
So I think I would add that in addition to sort of the fintech ecosystem, banking is one of the many components. So at WeLab, we operate a digital bank, but we also run other fintech businesses in Hong Kong and the region. I think a couple of things. What I would say is there's definitely been a lot of digital advancement. There's been a lot of advancement in general. A lot of it has been propelled by digitalization, and COVID actually has done the world a little bit of a favor. If I had to take some of the silver linings that came out of it, was actually increased adoption. We're very blessed in Hong Kong, where we live in a very convenient environment, where proximity and we're close to everything, where we weren't so much forced to take that on. But obviously with COVID, that has. What I would say is, in terms of digital banking, is the adoption and acceptance has increased dramatically, right? And from the very beginning, when my parents would be like, I don't know what a digital bank is, I don't know what an e-wallet is, this is for young people, this is not for me. And I think back to an example of iPhones when they first came out. When the first iPhone came out, I think it was very similar. For me, I would like, this is too cool for school and it's too expensive. I won't adopt it. My first iPhone was probably iPhone 4 or 5. For my parents, it was
Not a
probably.
Choose
Do you want to play Snake? So I think for my parents, it was probably iPhone, I don't know, 9 or 10 or even something a little bit later. But now, it's irreplaceable. So that's also how I see digital banking and digital financial services, right? In the very beginning, there's a little bit of skepticism. There's a little bit of, do I actually need this if I can still stay on my incumbent plan or my incumbent services? But over time, what you see is people's preferences actually change. Because once you've gone digital, you're not going to go back to queuing up, right? Once you can get results in 2 minutes, you're not going to wait 3 days, right? And sometimes people are like, oh, but if you wait 3 days, you'll get a slightly better rate. But I think market practice has shown that time may or may not be more valuable than a slightly better offer, because instant gratification for all of you, as you guys know, is a lot more valuable. So what we need to understand is, what do our customers and users want in terms of preference, right? And sometimes it is speed, sometimes it's price, sometimes it's a combination of these things. So I think what I would say is this also changes in the different times of the market, right? So today, what I want may actually change in a couple of months' time when, I don't know, the markets are a little bit more volatile or what have you. So I think for us, when we see being in a digital environment or coming from a FinTech company, is that we need to be really adaptable and agile, right? So the benefit of that is that we can adapt to changes, right? And so I think for a lot of the incumbents or the way that it used to be done, there is nothing wrong with that. What you're doing is absolutely fine. But I think the next generation, the younger kids who aren't here yet, right? Your children, and their peers going forward, they're going to expect a certain level that's going to be provided by digital providers, whether it's a digital banker. As I said, the benefit of being a digital bank is I don't have that legacy. I am operating much lighter. Arguably, I don't have as comprehensive a product set, but that's okay, right? I don't need to carry 100 things. Maybe what I do need is like the top 5 or the top 10. That may be enough. So I think there's plenty of market space for everyone to play the market. We just want to pick our space and be very, very good at delivering that. So, you will continue to be happy, Jasper, right? I don't need to please everyone in the room. I want to, but if I can select my niche and, please have that, I'd be very, very delighted.
Thank you, Jessica. I actually have one more follow-up question as well, if you don't mind. I know Hong Kong, actually we have this Hong Kong homegrown virtual bank, and are you guys looking into? Are you guys open to more international capital, or are you guys looking into becoming a digital savvy for the local markets?
Digital capital. What do you mean by digital capital?
International capital, sorry.
Okay, so taking a step back here, so we're already, operations in multiple jurisdictions. Our shareholder base is very diverse as it stands. So we are founded in Hong Kong, but we've got business partners that are global partners. Large asset manager and insurer in the world, Allianz, not the one next to me, is actually a very close strategic partner of ours, right? They're very international. We partnered with them to build, the first sort of tech-driven global intelligent advisory service in Hong Kong, but we are also looking at other markets with them. So that's one of many. We also have a number of international banks who are also shareholders and been partners for many years. So that's definitely not limited to the realm of Hong Kong. And what's very important is that you learn from your international partners, because you see what they do in a different market, or they see what we do here, and how can we adapt and export that to a different market. So that's very, very important. We can't stay here and say what we're doing is fantastic and just stick with it, right? It's always about learning new things and constant innovation.
I agree. Well, what about Howard? Speaking from an insurance standpoint, what do you think?
So I was listening to Jessica talking about the digital piece, and I can remember his customers that keep asking me for the paper form. He changed the address last week. We still have customers like that, which we have to respect their wish. But all jokes aside, so it is some homework, and I realized there was a research center in Singapore, IMD, competitiveness center. They ranked Hong Kong numbers, I think 6 around all the countries they ranked, and number 2 or number 3 in Asia Pacific for digital competitiveness. So I'm just trying to think what that really means. And when I look at FinTech, for them to have a presence in Hong Kong is a choice, is essentially the definition, right? Because you want to be a place where it's digital competitive and digital ready. So to me, it comes down to 2 things: it's demand and supply, right? So if you're a FinTech company, a startup per se, and you want a supply of digital literates, essentially people who would use have that digital maturity. Those customers I think just was talking about, not the ones I was talking about, the paper form. So I see that maybe because of COVID, maybe it's not, but in 2021, by the end of it, I think there's over almost 5 million users across 4 different digital wallets today. The WeChat Pay, the Alipay, the Octopus, and Tap and Go. And that's almost, I don't know, 67% of all populations. That's a lot, and people do use them, right? Anyone here who don't have an Octopus? So right, so that's demand right there. There's supply right there, right? So and the other front is demand is like a lot of these fintechs, they are B2B, right? So they work with financial institutions, and I think Hong Kong is one of the places that we all can agree that has probably headquartered for a lot of the financial service operations around Asia Pacific, per se, right? And large number of suppliers for you to work with. And finally is funding. So I read some studies, some data, I won't bore you with that, but just from my personal experience, before Prudential Insurance, I was actually never in financial services. I was in every industry except for financial services, logistics, products, fast moving, media, entertainment, you name it, telco. And there was one startup I was with in 2011, and we were on a funding crunch. I went 3 locations, Hong Kong, Shenzhen, and Beijing, 8 weeks, 40 VCs. And I got rejected because I don't have a mainland Chinese passport, I look ugly, I don't speak Mandarin, you name it, it's been done. But the money that we got is in Hong Kong, baby. Right, so obviously that didn't work out so well. So I'm a Prudential now, so I have a very stable paycheck. So do buy insurance, but nonetheless, I mean the funding is a big deal, right? And Hong Kong is the place to be. So to me, I think that digital readiness is there, and then echo to what Neil mentioned earlier. I think the fintech startup role for the last 5 years has got to be at least threefold. Despite COVID.
All right, thank you guys. Moving on to another topic, so future innovation. The financial industry has been putting a lot of money into new technologies, AI, blockchain, Web3, DeFi, it's being integrated into banks and insurance. So Howard, with the emergence of the new insurtech startups in Hong Kong, some of them partnering up with traditional insurance companies. Where do you think Hong Kong's insurance market is heading with these new technologies?
Sure. Thanks, Jasper. So Prudential, we invest a lot in new tech, AI, open API, health tech, and we also see a lot of our competitors, friendly competitors, invested in different things like metaverse, so crypto and all that. And we also see a lot of one and done, do it and then that goes away. So not necessarily a bad thing, but there are 2 observations, right? In terms of where you call it heading, whatnot. Number one, the one that we found it to be successful are the ones that, I know it sounds cliche, but really focus on the customer experience and delivering tangible value. Okay, so I'll talk a little bit about that, right? So there are a lot of players out there, they buy land somewhere and the metaverse, no shades on crypto, I love it. No accounts, yes. But we look at the customer experience in terms of the insurance value chain, right? You buy insurance, you claim, and you get paid. Hopefully, but there are a lot of hard problems or pain points along the way. So, for example, with COVID, people aware that health is important and it's not given. So the protection, it creates that awareness. But most people might not know the number one reason why one is unable to get protection in health or medical is not because they have conditions, it's because of the underwriting, medical underwriting process. Anyone here who bought a VHIS, voluntary health insurance scheme? Do you know you have to answer 52 questions? 52, exactly 52. Okay, maybe your end agent answered that for you, but that 52 questions, right? So that's a lot of friction. How can we address that? Because people who can't get protected because they have underlying condition, fine, insurance people can be greedy, but at the same time, if they can't do it because they can't finish the process, that's unfair. Can they use AI, predictive underwriting, that helps them think, well, this is the guy who's this profile, maybe we can take a guess. Or we need health data. Who here have an Apple Watch? Who here have done a body assessment at a clinic or a hospital? The data exists. Can we leverage OpenAPI to get that data instead of asking you to fill it out? These are hard problems that can be solved by technology. And same goes for claims. Anyone trying doing claims for a hospitalization? Oh my God, the number of pieces of paper that you have to fill out. Thank God for agent. But the data, it's all there because you're basically being asked to get data from hospital A to doctor B and clinic C and then put it in a nice form and send it to insurer D and then they reject it because you're missing E, right? So the data is all there. Can that be a common data platform, maybe use blockchain for that matter, and make it work, right? So we look at these problems and we believe these are what can genuinely help our customers. Yeah. So now the second thing, I'll quickly touch on it because I think Jessica is ready to fall asleep.
I'm jet lagged, that's just in case he's making snarky remarks. Please go ahead.
So the other piece is what we call an innovative mindset, because at Prudential, what we do is we aim to create a culture that we frame everything as an experiment. So we usually $100 million project, 19-month project that will really work out so well. By the time you go out, things change. So we want things to be short and sweet, but at the same time, we frame it so that it's an experiment. An experiment, you don't fail. You prove things right or wrong. You create a safe environment for people to try. But you don't do complex experiments, you do simple experiments. So that allows you to experiment and innovate. And then you use data to validate everything, right? So we use that, we're trying to create that culture, leverage that culture so that we can explore things without having a great risks in doing so. Now, don't forget, insurance is a company that takes money from you, but take risks from you as well. We are very, very sensitive to risks. So experiment is good, no risks, right? So that's how we look at it. And with these two observations, what we found that to be most successful in terms of new technology or innovations.
I see. Thank you. Jessica, we got questions for you. I know Virtual Bank is already a very big step in innovation. Where do you think a digital bank as an industry stand for Hong Kong?
So I think the future is actually fantastic if you look at it. Let's start off with a couple of stats, right? So the banking market, the retail banking market in Hong Kong is massive. Annual retail banking revenue in Hong Kong is around $53 billion US. That's a very, very large number, $53 billion. Now, there are a number of players, a number of incumbents that obviously have a very, very strong market share in Hong Kong. However, I'm going to quote a report from Quinlan Associates. where they made an assumption that by 2025, so just about 3-4 years from now, virtual banks will take probably around 20% market share. So my math comes to around 10-12 billion US dollars of revenue a year. That's a very large number. Let's take a step back. Let's say, there's 8 virtual banks in Hong Kong right now. If we split that 10 billion, by 8 virtual banks, it's 1 point something per year. So that's a large number. Okay. Now, if you're saying, well, why be so? How are you going to achieve that, right? Are you taking incumbent market share? Are you growing the pie? I think it's going to be a combination of the both, right? Number one is, yes, you will be taking some market share, but I think you're taking market share probably from some people in the tail. Those who are failing to innovate, those who are being a little bit more lethargic in terms of their development because they don't have the scale, the capability, or what have you. So that's one aspect of it. The second aspect of it, and what we've seen in other markets, is that digital banks are actually innovating not only in terms of the product delivery and making it faster and a better customer experience, as Howard mentioned, right? But more importantly, it's also the revenue model changes, right? A few years ago, when the digital banks were being introduced, there was a lot of pressure for a lot of the incumbents to remove, minimum account fees or transfer fees, etc. It was mandated to the virtual banks, but it wasn't mandated to incumbents. But for them to be competitive, they actually have to shift their revenue model too. We think that's fantastic because it's fantastic for every single user in the market. At the end of the day, the benefit of technology is not for corporates to make more money. Benefit of technology and digitalization is to actually make it better for everyone, all the users, all the corporates, and everyone in the ecosystem. So if that means lowering fees and being able to do things in 2 seconds as opposed to 3 days, that's a win, right? Because the solution should not be, let's throw in more manpower. Now, I think some people ask us, so why do you have the same level of headcount as, before? And part of the reason may be because instead of deploying someone to be counting checks or cash or what have you, is you've deployed them to do research and development for the future. Now, it may or may not be the same person, but in terms of a number of headcounts, it may be the same. So part of what needs to happen is reskilling where possible, or changing the mindset of that, changing the revenue model in terms of how that is the case. So going back to my point in terms of where we see the future of digital banking, we're really excited in terms of the sustainability and what the product is delivering. But more specifically, if you think about, okay, you have a CASA product, you have a term deposit, you have a loan product, you have a wealth product. The experience is better, the pricing may be more transparent, the whole experience is easier to use. I'm not filling in 53 questions, maybe only 15 or 16. But the thing is, why have we been able to achieve this? And that's exactly when we have leveraged on data. We already have consent from Howard to get access to his, mobile phone bill, which has information on certain parameters, right? Can we extract that? Super simple things like OCR recognition. When you take a photo of your ID card, it pre-populates the form. It sounds silly, but trust me, these are simple innovations that a lot of people do not adopt. It makes life a lot easier when I don't need to retype in my name, my characters of my Chinese name and numbers, which make absolutely no sense of what 5631 means, At least I know how to spell my English name, but I don't know what my digits are, things like that. Very brainless, but takes 2 seconds. So these are the low-hanging fruit. The real change that digital banks and virtual banks will probably deliver, we hope, and from our perspective, is to actually start being intelligent and provide advisory services. Know you better than you know yourself, almost preempt and give suggestions. A lot of the times right now, what we found is even for wealth management, people ask you, what is your risk appetite? High, medium, or low? I don't know. Should it be high? Should it be low? And even then, my definition of high may not be the same as Jasper's definition of high. But you're asked these questions and you're like, I don't know, how do I choose, right? So we change it a different way. So instead of asking that, we ask, let's set a goal. What do you want to achieve at the end of the day? And commonly for Hong Kong, the goal for a lot of people is, I want to save money to buy a house. I want to save enough for a down payment. So hypothetically, we see very commonly it is, I want to save, I don't know, whatever the amount is, $1 million by the time I'm 40, or 500,000 by the time I'm 40, or whatever the age is, right? So you have a goal. So let's work with you towards getting that goal, right? Which is you need to put in an X dollar every month. And then we ask you, how much do you think you'll put in? And we set up time for that, right? And based on an investment portfolio that meets that. So it's just about, it's the same outcome, but how you work towards it and the journey actually makes a big difference. Because you ask me, high, medium, or low, I really don't know. And that's always been the way that things have been done as part of the 52 questions. So I think that's the beauty of where digital banking or what we're trying to do with our virtual bank, right? Go try it. If you guys haven't tried it, let us know. It doesn't always work. The beauty about this is that, which is that if it doesn't work, if we find out along the way that, hey, we thought it was a beautiful product, but the feedback we're getting is that it isn't, or we really don't understand it, how can we pivot? So what we do as well is along the way, when you're investing every month, we tell you whether you're on track or not. So it's not a one and done. It's about being there with you on the journey. So, and we have this little pop-up that says, hey, Jessica, you're not pulling your weight. You said you put in $1,000 every month. You're slacking, you're only putting 800. You're no longer on track. Should we redefine the plan and what the goal is? Or it could be, Jessica, you're pulling your weight, you're putting 1,000 every month, but the markets are now in a very different situation from when we first discussed. Should we readjust in terms of what it is? Or, hey, Jessica, you're putting 1,000, but actually all you need is 500 because the markets are fantastic. Do you want to readjust? So I think it's a lot of being like intelligent in terms of advice, helping you guide you along the way and being proactive. Now, rather than just, hey, let's just sit and wait and see what happens. And then 2 years later, you're like, oh, no one told me I'm off track. So for us, it's about how do we take the data that we have on hand with what's happening in the market, what our partners are doing, and we do a comparison and be like, hey, Jessica, someone who is similar to you is doing this, this, and this with their lives. They're saving more, they're spending less. Do you want us to help you optimize different things? So it's about providing that extra level rather than just being reactive. That's the future once we use technology and data together.
Thank you, Jessica. I actually have another follow-up question, but maybe ask you first. Let me ask you
No, please ask me.
I know you're a huge advocate of new technologies, blockchain, and you have your own company that does blockchain. So what do you think? Well, actually, do you think how long will it take for the market to actually achieve mass adoption? And what's your thoughts on that?
Yeah, I mean, truth is, if we kind of look at all the GPTs, so general purpose technologies, AI, big data, blockchain, cloud computing, I mean, a lot of people are already implementing it, right? It's just not so much about the actual use of the technology as much as it is about the use cases of those technologies, right? So, in a typical incumbent bank, we won't name names, right? The databases, generally speaking, are very fractured. I'm not talking about you. But how do you unify that, right? And how do you leverage that? Because ultimately, the data scientists can only work with whatever data that is presented to them at that time. So if the four of us decided that we were going to have dinner in Hong Kong, you might show up early, he might show up late, you would show up on time, but it doesn't make a difference when you're doing analytics, right? Because you need all the data to be there, available and accessible at that time to make a judgment, right? To make the decision. And unfortunately, that's not the case in many situations, right? So adoption is already there. It's in specific use cases. Generally speaking, it is where, number one, where the most pain is, right? Or number two is where the most money is, right? I always talk about pain and gain, and there's really nothing in between, right? Because you either feel the pain, and you're like, oh my God, we're losing so much money from fraud on credit cards. What do? We go find a third party to, improve the model, right? We're not getting enough revenue. We need to go target acquire new customers. Okay, what do? We AI, we partner with different platforms, Ali, JD, Ping On, you name it, right? So, and then you leverage data across platforms, not your own data, because you don't want to, I work at McDonald's, but I don't want to eat McDonald's all the time, right? So you want to leverage other people's data to make better judgment, better decisions, right? And more accurate decisions. So I would say partnership is really the key inside of the space. How do you leverage product propositions, channels, geographies, and how do you develop that is a different story, but you have to target, identify, and leverage technology to execute on that. So, yeah.
Thank you. So my question would be, I know, a lot of the innovation like digitalization would be based around how you utilize data and how much data you have in data lake, right? So do you think data privacy in some ways will damage the speed of innovation? It's an open question.
I'll take this one. So first of all, my question to everyone is everyone's definition of data is very different. Okay, so that's the first thing. So what is data, and how do people treat different forms of data? So there's internal data, there's external data, there's inferred data, right? And there's a lot of different things. Again, I'm not technical, so I do this in layman terms, which is fantastic. If you're technical, I apologize. So I think that's one area that we've actually really been focused on, which is a bucket, what we call privacy computing, which is all about the security of data, right? Defining what is data, how do you store it, who uses it, who gets to use it, what do you do when you do use it, where does it go afterwards, right? To your point, does privacy stifle innovation? Not really, right? Because even for a lot of companies, even when they have so much data, they don't even know it's data, first of all. And when they have it, they don't know what to do with it, right? So the value of data and what you do with it is not about quantity. It's about knowledge of knowing what to do with it. I think that's the short answer. The second part I would say is there's actually a lot of techniques and technologies that are, being adapted more and more. So, I'll give you guys a very, very simple example within the privacy computing realm. We've developed a number of patents for us internally as a company in the world of edge computing. How many of you have heard of edge computing? Okay, so edge computing is a technology that's most commonly heard of in the world of autonomous vehicles. So self-driving cars, I guess, is the simple way of talking about it. So the big difference is that historically, they felt that if a car was driving at speed, a self-driving car, so no human, right? It was relying on the cameras to scan the grounds, right? So what would happen was the cameras were looking around to the road conditions, sending that to the cloud, right? And then processing it to say like, oh, there's a dog in front of you, you got to divert. Now all of this is done in real time, which is reasonably fast. But what they found was there was still latency. So how do you speed that up? And what you do, instead of processing at the cloud, you process it at the edge, which is the camera that's actually on board there, because the chips and the technology is now, fast enough to do so. So if this was a camera, it'd be processing here as opposed to back up into the cloud. Okay. And so what that means is, why does that matter? Well, if you're going to kill a dog in front of you, latency or any sort of delay, even if it's 1 second, will make that difference. Okay. So that's a simple example. So from how we've applied in our technology is along the lines of when we're processing a decision, right? At the end of the day, historically, what used to happen was we'd gather maybe 100 data points, send them up to the cloud, do the processing, and then come back down and say yes or no. What can be done right now actually is that there's technology where that can be processed on device, right? That's the edge, so to speak, right? So the beauty about that is that you are only sending, you either can make the decision on device, i.e. no latency. The second thing is the data, 100 data points don't necessarily need to be transmitted, right? There's always risk when that happens, when there's a transmission. The second thing is, even if there's no data loss within that time, there's a time differential. Well, what happens when I hold on to those 100 data points, right? What do I do with them? What if I don't store them properly? Right? What if I store them properly and what if I misuse them for other purposes?
But let's say I don't misuse them, I store them, but for some reason there's a leak. Then what happens? So all of these concepts are extremely, extremely important, right? And this is why technologies of privacy computing can actually help mitigate these. Now, people will be like, well, you don't get those 100 data points, so how are you going to make a decision? You can, right? Because a lot of the times is you only take what is necessary to make your decision, right? For the purpose it was intended. You don't be a hoarder of data for no good purpose. And that is the reason why privacy rules exist, to protect, individuals, because I'm giving you data for the purpose I consented you to give, not just so that you can amass a collection and have fun and decide what to do with the data, right? So in a way, the guidelines are there for a reason. Now, every jurisdiction and market does it slightly differently, but directionally, we feel that as an organization that, we're very supportive of these rules and regulations in terms of that.
Thank you very much, guys. So moving on to global confidence. I know, a lot of my clients ask me about, what do you think about the Hong Kong market, right? With everything that's happening around the world, where does Hong Kong stand? And I wanted to discuss this topic with you guys. Jessica, being one of the most known and successful virtual exit Hong Kong, what do you think the city or a company needs to do in regards to regaining the confidence from major investors or major corporations?
So we have a lot of, foreign investors as a shareholder of WeLab, right? I talk to them constantly. I ask them what's going on. So I was just telling Raph, the Europeans are boycotting the World Cup, but that's a separate issue. So there's a lot of things happening in the world, right? In terms of how they see Hong Kong, I think they're just bummed. They're bummed that they couldn't travel, that they couldn't come here because they love Hong Kong as a place. They see that there's a lot of value. Historically, everything that made us great historically in terms of being a financial center, access, the law, the quality, I'm going to be serious, the quality of the people in terms of the standards of what we deliver is actually very, very high, right? There's been a little bit of a dip in the short term because of, the restrictions and what have you, but we see that as being a dip, right? It's not a permanent damage, right? And if you look at markets and cycles, there's always going to be dips, right? It's about, do you recover? And has anyone permanently gained an advantage over you during that time? I'd probably say no. So I think in the conversations I have with a lot of, foreign partners or investors and so on and so forth, the confidence is there. They just want to observe a little bit more. The second thing I would say is the benefits that Hong Kong has in terms of infrastructure, in terms of financial infrastructure, in terms of physical infrastructure, those benefits continue to remain. And I think the beauty of what Neil and talked about earlier was that we're not being complacent, right? We're continuing to innovate, right? Ease of doing business, we're continuing to not rest on our laurels for that aspect of it. So what has happened in the last few weeks in terms of easing and opening of borders, less PCR tests, et cetera, coming in, those are all steps in the right direction. Probably could have run a little bit faster, but hey, sometimes we all eat a little bit too much and it takes a little bit longer to digest. But we're heading in that direction now. And people have goldfish memories, right? So once that opens up again, we're back, baby.
Great. Good to hear. Oh, what do you think?
Oh, we're confident. If you look at Prudential, right, we made a huge change the last couple of years. For those who might not know, we pivoted. We offloaded the business in banking. Traditionally, it's large in Europe and in the UK. And we offloaded the US business, Jackson. We got rid of it. And we moved to Hong Kong to be headquartered in Hong Kong. 2 years, 3 years ago. And then with Asia being the focus company. And shortly after we listed in Hong Kong. So we have full confidence. And I think there are a lot of things wrong in the world today. Wrong is probably not the right word. Challenged, maybe is a better word. And COVID being one, inflation, war in Ukraine,
you name it, is there, and what's going to happen next after COVID, et cetera, et cetera. So I think I was looking at, right? So, but the Hong Kong I know, after growing up there, born here, is that we are very resilient. Takes time. But if you ask me, I mean, we can talk about the technical, more sandboxes from our regulators and more change program from with startups, blah, 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 and that would make life a little easier tactically. But in the long term, I haven't, I'm still here, I'm not going anywhere, so I'm fully confident. I have no comments on Hong Kong response to COVID. I love my masks, and red masks. But
You love your job more.
Job is insurance, so whether you have red or not. Remember, always get protection, double protection. For those who are not protected, you might find a agent with seriously doing you share with them, and they will respect your data privacy. No edge computing. They just had an iPhone. But nonetheless, just very confident.
Great, great. Neil, anything to add?
Yeah, I mean, I don't know if you have a new economy question coming up. But yeah, I mean, if we kind of take a look at it, we haven't talked about it since FinTech Week. I think, the huge announcement, right? Talking about virtual assets, how it's going to be a virtual asset hub. Obviously, there's been a cloud over, or maybe like a typhoon, if you want to call it, with the whole FTX situation. But Hong Kong's made a statement, right? And they've said that, we're going to be a virtual asset hub. We're here to play. We're here to win, right? We're trying to field a championship team so we can win the championship, the NBA finals, right? So, and historically, this is kind of weird. We were there, Ian Roth today. Because I don't know if you know this, but those guys were in that office before. FTX used to be in that office. So, but historically, actually, Hong Kong has been the virtual asset hub for years before this, right? So, so the current situation is this. I mean, if we kind of look at Dubai, we look at Singapore, fundamentally in the virtual asset space, it's been a land grab, right? And whoever put up the framework faster on the VASP and so forth, was able to get the people, the resources, the investments, and so forth, right? The benefit for Hong Kong in that sense is that, if we were playing cards, now I see everybody's cards, right? And now I can make different adjustments. Not only that, Terra, all the different situations with Voyager, Celsius, you name it, 3AC, and now FTX, we didn't actually go through a lot of that situation. A lot of the other jurisdictions did. So in some ways, it's a benefit for us to see the other jurisdictions. It's also a benefit for us to learn from all these other case studies. At the same time, outside of virtual assets, if you kind of think about it, and this is talking through the whole ecosystem inside of FinTech, is that Hong Kong is very well positioned to not only handle that piece of the whole Web3 space, but also the metaverse. We have basically a global champion sitting down in Cyberport, right, called Animoca, right? And I don't know how many of you guys know that they've invested in about 300 different Web3 companies around the world, okay? So this is the second leg of this stool, right? The third one is from a national sort of policy perspective, Hong Kong is positioned to be the cultural and arts center for China. It's not a surprise. The whole West Kowloon is just, arts all over the place. Why? Because of this drive. So in a so-called planned economy, we fall into the space. Going into virtual assets, you've got the cultural center, cultural and arts center, and you also have the metaverse piece. All these three things are working together, ultimately, in a more integrated way to deliver the future of Hong Kong. So inside of that ecosystem is HKSGT, Cyberport, Best Hong Kong, Start Me Up, all these different ecosystems that we're also linked up with inside of FinTech Association. And we're all driving for that growth, right? And we're driving to become and build that championship team and win that championship. So, I'm very, very bullish about Hong Kong.
Great, good to hear. So, bringing some good news to the market as well. So, moving on to Greater Bay Area, GBA, there has been a lot of talks around this topic. Hong Kong has been a traditional financial hub, a legal hub. Shenzhen has been a tech hub, and Macau is like a gambling/gaming hub. So, it's more of like an open discussion for you guys. Do you think Hong Kong will actually lose out from it or benefit from it?
We've been operating in GBA for a long time. We feel that it is, the term GBA has been coined, recently. But as I said, we've been operating out of Shenzhen, as part of the China market for the part of 9 years. So yes, now that it's been coined, it's fantastic. But it's always been a fantastic partner that is beneficial. I think that's the way we see it. We personally, for me, I used to be up in Shenzhen 2 to 3 times a week. It takes us 45 minutes. Take your car up, you take your car down. Super easy, super convenient. There are a lot of benefits there. Everyone says that, China's Shenzhen is a tech hub, Hong Kong's a financial hub. Yes and no is probably the way I would say it, because a lot of things actually work hand in hand. One does not work without the other. And what we're doing actually is a two-way information flow and two-way talent flow, right? It's not just all the tech people are in China and all the finance people in Hong Kong. That's not entirely true. And I don't think that's how we have always operated our business. There's actually a lot to learn. And the way you grow is you kind of build a Venn diagram and merge it so that all the intersections start to intersect rather than keeping it super distinct, right? When you live in your silo, you don't actually learn in terms of that. So I don't see every time we feel like, oh, there's another bank, there's another player in FinTech, that's competition. Yes, it is. But at the end of the day, it's all about a bigger future goal, which is growing the ecosystem, right? When we thrive, we all thrive together. Hopefully what we're trying to do is not just take market share, but grow the pie, right? That's the ultimate objective of what it is, right? If it's just about, oh, I'm fighting against this person, then that's not a very positive and constructive mindset, which is what Howard talked about, right? A lot of this in terms of the growth and innovation mindset is about how can we as partners work together to deliver a better outcome, whether it's a product or whether it is more of a, changing the way things are or the ecosystem at the end of the day. Just for partnership, we work with banks that may be perceived as being competitors, right? And at the end of the day, because first of all, we don't compete in absolutely every single person, right? The world is very, very big, right? And at the same time, there's actually a lot of synergies where we can both have a win-win outcome from it. So from the GBA, I think it's absolutely fantastic. And it's like what Howard talked about on data exchange, data flow. The more open there are with the right guide rails, with the right, rules and regulations in place that we all fully understand and are transparent, I think that that's a fantastic opportunity. Whether it's financially, whether it's from a social perspective, whether it's from a labor, or from an education perspective, there are absolutely a lot more benefits. And I feel that when we think about businesses, we need to feel like take it from a very positive perspective. If you're being guarded and you're concerned, it's not really going to take you very far with that sort of a closed and restrictive mindset.
So Jessica mentioned of that big pie. I would throw some numbers at. I think that was 86 million people in the Greater Bay Area with over $1.6 trillion in GDP in US dollars, right?
What that ranks in the world, or what that compares to?
What?
It's like a South Korea or an England in terms of GDP.
Yeah. So
just for the just for the GBA area.
So compared to that Hong Kong, 7 million people, it's a significant opportunity. So So my point is I look at GBA from the standpoint of what GBA excluding Hong Kong meant to Hong Kong and Hong Kong meant to GBA excluding Hong Kong. So it's a huge market for people in Hong Kong. I think that's the most obvious answer. You know, you can market your products and services to and have access to that market. It's much bigger. And we can argue financial leadership or engineering whatsoever, right? But the other side is, which people tend to overlook is, you know, Hong Kong is still the main investment conduit for China, right? So if you look at the capital, the investment inflow into China, 70% of it, over 70% of it is still from Hong Kong. And the investment outflow from China to the rest of the world, over 50% that's Hong Kong. Right? Hong Kong is still the main investment conduit. It is of great value to China or / GBA city without Hong Kong. Now, so one of the areas that we look at is insurance connect, which there have been a lot of talks about. And so a lot of folks would talk about, hey, you know, can you sell insurance to the people who live in China? But we don't look at that. And that was just an earlier conversation I had. Is that insurance is a long-term business, right? Yes, you might meet a friendly-looking insurance agent sitting next to you, but I swear he or she will never sell you anything in the next 48 hours or 12 weeks for that matter, because it takes time and effort to nurture and to get to know you as a relationship development, right? So for us, in my personal opinion, it's not so much about going there and start selling. It's about being able to access and build relationship. And one of the things with doing that is allow us to service our customer more easily in China. So one of the first elements that we are working on in Insurance Connect is to open up service centers in China to streamline servicing, payment renewals, all these little things that seemingly unimportant, but absolutely important, because in a long-term life insurance business, anyone can guess what's an average customer retention rate, meaning they stay with you. Usually a good insurer is in the high 90s. That's right. They stick with you, right? So, and then they will buy more from you because they trust you. And that's not because our brand looks cool. Yeah, we that next to so okay, right? But it's about that servicing that happens because you rarely care about the moment you buy, but you remember forever the crappy experience when you claim. Correct? Yeah, right. So that matters, and the insurance can allow us to make that better for the mainland Chinese customer. And to us, it's very important as an insurance and the insurance scheme. So now, last but not least, two things I think Hong Kong can potentially lose out in the OGBA deal is that, number one, we've seen some surveys done on purchasing behaviors of mainland Chinese. No surprise, they share a fairly balanced preference against different channels. They buy from agent, they buy direct on website, they buy from apps. In Hong Kong, over 70% will choose to buy from agent. So as an insurer, you want to take advantage of that, we have to find a way to adopt that, to change that mindset. Agent is not everything, so we need to look at omni-channels. Number two, we talked about earlier, is data privacy. Now, we talked about innovation requires data exchange, but that at the same time crossover into what really needs data privacy. We're not going into details of that, but I believe finding the right balance between what we call data portability, cross-border, versus data privacy is crucial. Having extreme emphasis on either side is not going to get you anything. So I think these are the 2 points that Hong Kong folks need to, or company, corporates, whatever, needs to pay attention to if they want to take advantage.
Anything to that?
No, I think ultimately, so when I was at HSBC doing digital partnerships and innovation, we were responsible also for the development of partners inside of China, specifically for GBA. If you kind of look at it, the total, of course, inside of wealth, right? So back in the day when interest rates were zero, none of that lending action really made any sense. So we ended up going into wealth. We went into insurance, did different ecosystems there as well. But if you kind of look at Wealth Connect, it's been, pretty difficult, I would say, right? So you look at it, I think it's somewhere around total possible AUM is like 150, 200 billion US dollar that could come into Hong Kong. So a little fraction of that, right? Why? Because you need to open the account in person. And so how do we leverage technology, right? We're over here talking about FinTech. No, you have to walk over. Even today, you're like central. You got to go into the bank and open up an account. It's not easy unless you're using shameless plug. We have. So yeah, I mean, a lot of the incumbents are also inside the space that are operating in this sort of traditional sort of case, right? In terms of user acquisition, in terms of onboarding, KYC, all those different things. It's like, how do we use technology to make GBA even more integrated, right? And in that sense, you're talking about AI, leveraging all those different things, OCRs that you've talked about, where, they make you make funny faces in front of the thing so that they can see your movement and your behavior and the way you say this and that, all that stuff. But ultimately you can leverage, blockchain, obviously. Blockchain has a functional feature, zero knowledge proofs, that you do not actually transfer the data across, but it does verify your identity. This is being adopted by the governments as well. First off, you got to get onto the blockchain. Secondly, is leverage this type of technology to use digital ID and so on and so forth to verify these people, right? First port of call is inside of education, right? Because hopefully everybody's getting educated and getting diplomas and certificates and things like that. And then it goes on beyond that to national IDs and things like that, right? But ultimately that will be the gold standard and that will be mandatory, right? If you're applying for a job, if you are going for graduate school, if you're going to get a driver's license, all these different things will be starting to leverage this. China at the beginning of this year institutionalized 15 different cities to leverage blockchain, 160 different entities to deploy blockchain in those specific entities. One example is inside of automotive, and they went to SAIC, General Motors joint venture, and they told them, you need to deploy blockchain use on this particular use case. Guess what happens after the test and learn? The entire automotive industry will have to adopt that blockchain. It's just the way it is, right? And that's rolling over education, healthcare, finance, trade finance, so on and so forth inside of China. Guess where that's going to be? Greater Bay Area. So this is where it's sort of like the 30,000 foot level will be. Because even if today we were talking about remittances, how is that a unified form to do a remittance between Macau to Hong Kong to China? It's completely not, it's not impossible, but it is not an easy experience, right? So this is where the technology is being leveraged and it's being institutionalized, starting with China and coming over to GBA and into other parts, right?
Great, thank you guys. So before jumping into the Q&A session, I just want to quickly conclude our discussion that, despite of all the challenges Hong Kong has been facing the past few years, I would say, we remain positive and excited for what's about to come for Hong Kong. Well, thank you very much for the discussion. Any questions from the floor?
There's an article in the South China Morning Post about Senator providing a data exchange. I was wondering if you know more about what's going on with China data
Rap, do you want to take this?
Well, yeah, we're gonna go and choose audience. I think what you're talking about is CDI, right? I think it's the central data interchange that you're talking about. I'm not actually that close to it. Yeah, So I think it's related to the CDI. It's just recently launched, but I'm not, honestly, I can't really opine on that. I'm not that familiar with it, but yeah. Sorry, I don't know if these folks are.
I'll get back to you.
Sorry about
Yes, we got to talk about the Hong Kong FinTech ecosystem. You also line Shenzhen, for example, which in many ways is very inward looking. What are the two sides, obviously financial center here, have to offer each other? So here in Hong Kong, sorry, no way around. In China, payments, all that sort of thing. China is the leader in the world. So what do we have here in FinTech world? What sort of things can we, what are the pain points can we work together with financial institutions or FinTech parties, sell side and boundary?
So I don't, because we obviously talk to our different business units every day on a constant basis. So knowledge sharing isn't just defined as being one static point in time. It's a lot of it to do with how do you manage different situations based on what you've seen in the market. So I don't classify it as they're very good in payments, so we learn from China because they're the best in payments. We do, but I mean, I don't see it as being static. There actually are, I think when you think about knowledge and knowledge transfer between different businesses and different markets, it's a constant evolution in terms of the process. What I would say that one thing that Hong Kong, as a little bit more established market, does very well is actually in risk management. And part of that is because of the long history that we have and the processes and the discipline. One thing you will see is if you look at economic cycles in Hong Kong, there's a pretty high correlation with the rest of the world, right? In terms of how the market cycles go. Now, in China, these cycles are quite different. So in the sense that, yes, they do follow the macro trend, sometimes they don't, but a lot of times what you'll see in China is you'll see much shorter cycles for their risk cycles. So the world would be like this, China would be like small blips along the way, right? So I think there there's different techniques you learn from managing different markets, but a lot of the times in China, what we'll see is that there is a lot of domestic knowledge, but much less sort of from a global perspective. And you can also learn from other markets in terms of how they've done different things. So what I would say is don't discount the power of international businesses, internationalism, rather than saying, we're just focused on our domestic trends and how we do this. It's got to be a combination. So what I would say is something that's worked for many, many years actually has a lot of merit to it. So our philosophy is always take the best of the old and new and cherry pick what works and still relevant. Because if it's not broken, you don't have to fix it because there are good systems, but some of them are antiquated and don't work or no longer the most relevant, then let's choose not to do that. So to your point is there actually are a lot of nuances. It's not just let's pick this one because one without the other doesn't make a lot of sense.
Just to echo a little bit on what Justin mentioned, I think risk management is key, and we have done sessions on knowledge sharing on that front with some of our colleagues in China. We have a joint venture in China, but at the same time, surprisingly, just the exposure, not very macro view, very tactical, is that sometimes when we work with our colleagues over on China's side, and they have access to partners or services or products that we might not have access to, and surprisingly, vice versa. And I'm honestly surprised a lot of times when there are service providers or partners that never really establish that access to China, but have access to us. And through that communication, that exchange generally happens, right? So it could be learning from their side about a partner that we want to work with, that they work with them, or something that we know of from a partner in Asia, which they never heard. Right? And despite China is being a country where that it's open to English, right? So to me,
That's a surprise when I first found out, but it's authentic. We see that as well.
Yeah, maybe just to add, I think, traditionally, obviously, Hong Kong is a gateway or a springboard to international markets. So, whether you're, SOE or a private inside of China coming outbound, they're always looking for that type of access points, right? But I think as far as China, Hong Kong leveraging a lot of the contacts inside is also accessing China markets. It's accessing China technology. It's accessing a lot of different things that even the resources. So even if you talk about inside of the HR space, I mean, you're looking at a 20% unemployment rate inside of a lot of this, inside of the China market, specifically inside of the technology space. And a lot of the big tech, Alibaba, Tencent, JD, Ping An, a lot of them are shed headcount that are fully capable of doing, if not, stellar work, right? Whether they're block, I mean, I picked up a guy from Guangzhou, not picked up a guy. I hired a guy from Guangzhou. Stop it.
Yeah, see that screen right there?
So yeah, he's a fantastic. He was from Tencent. He's a stop. He's a blockchain. Yeah, he's stellar. So there's fantastic talent that is on the other side, and just a lot of people that just came off from, top tier, really. So, even if we talk about those, the headcount resources, that type of talent, if we talk about the technology, I mean, Shenzhen, you're talking about Tencent's in there, Ping An is in there. If you've ever been to the Ping An Innovation Center, some of the stuff that's inside of that place is just amazing, right? I mean, you can go in, crash your car, and time to cash is 15 minutes, right? They can tell you, okay, you take a couple pictures of your car after you crash it, and they'll estimate, oh, okay, it's going to be 500 bucks. Here's the money. And by the way, there's these shops around here. Pick a shop. They have the times already. 3 o'clock, drop your car off. You'll get it by 8 o'clock, right? This is the type of technology that they have already pre-existing inside of China. So how can we leverage that? How can we help them to internationalize? This is what Hong Kong's sort of springboard to international markets, whether it's Southeast Asia or other, is where the benefits are, right? So
you giving me ideas about claims on other insurance?
Yeah, it's just indirect.
Yeah. I think we would. I'm aware of time, so I'm pretty sure a lot of you are hungry and thirsty. So we're just gonna cut the questions there, but don't worry, we still got a lot of time to mingle. So I'm just gonna end it right here.
Yes. So thank you all. Thank you, panelists. Like I said, yes, let's give a hand up to the team. Part of it is that, yeah, Hong Kong is back. Technology has always been here and we're advancing forward. So I just want to say again, thank you to the FinTech Association and also our panelists as well. I mentioned earlier, have a lot of drinks. I don't want to carry back to our office. So please do help yourselves.